take a look back at the legacy left behind by RBI's iconic governor and the road ahead.
My name is Rajan and I do what I do.
Raghuram Govind Rajan truly lived up to these words. He unexpectedly announced his decision to quit the RBI over the weekend, bringing an end to a transformational era for India's financial sector. The Rajan era was transformational primarily because it made the RBI by law an inflation-fighting central bank, adopting CPI as the inflation indicator, signing a monetary policy agreement with the government so that both the RBI and the government are bound to achieve the same inflation level, which is 4% plus or minus 2%, and finally, ensuring that monetary policy is made by a committee and not by the governor alone. Rajan's successor and the government will have to get the Monetary Policy Committee going. More importantly, they will have to ensure that the economy moves towards the 4% inflation target, or at least remains below 6%. If that is achieved, Rajan would have done a lasting good for the economy.
If you ask me what we need to do going forward, one is of course move inflation towards what the Urjit Patel Committee report suggested and what is in our framework with the government, more to a comfort level in the band. We are already in the band, but to a greater comfort level. The second is cleaning up the bank balance sheets so that they can fund growth. That's extremely important.
Cleaning bank balance sheets. That was the other bold task undertaken by Rajan. The RBI has since given banks tools to write down the debt of highly leveraged companies and sell those companies to healthier promoters wherever possible. This is a seriously unfinished task and will require delicate handling by the successor. The other task which Rajan promised to start is building a corporate debt market. Rajan's plan is to allow RBI to accept some corporate bonds with suitable haircuts at the daily repo window. But as Rajan pointed out recently, there are other unfinished tasks.
On the reform side, clearly market development, especially fostering a corporate bond market. And this is something SEBI chairman and I had a discussion just this weekend. And we intend to move as fast as we can. And finally, financial inclusion. I think it's an unfinished agenda. We need to do a lot.
Among Rajan's completed tasks is the stability in the forex markets. He has left a robust kitty of reserves up by 30% since he joined. Current account deficit is down to 1% of GDP. He has also left behind a game plan to tackle the moving out of the $30 billion of special FCNRB deposits that were issued in September 2013 to buffer the rupee. However, the new man in RBI will continue to need some of Rajan's savviness to tackle external threats, given that the global currency markets are still running high on steroids and are low on growth, and a Chinese rebalancing or a Fed rate hike can bring turbulence. It is at such times that Rajan will be sorely missed. In Mumbai with Latha, Venkatesh, Ritu, Singh.